Good morning, students. So here in the session 54, the topic internal reconstruction. Here in this internal reconstruction session 54 topic, 54 session, we study the writing off of the paid up capital of the company. So here it means writing off of the part of the paid up capital which is not represented by the tangible assets. The amount so written off is retained for the purpose of reconstruction of the company. It means capital is written off and the same amount is used to write off the fictitious assets such as preliminary expenses, accumulated losses, discount on issue of shares and debentures. Here, writing off of the paid up capital of the company. So, writing off means reducing or reduction of capital, paid up capital. So, here, first of all, the part of the paid up capital which is not represented by the tangible assets, which is not presented by the tangible assets. So, such amount is retained for the purpose of reconstruction. So, here the part of the paid up capital is reduced and such reduced amount is utilized for the purpose of writing off of the fictitious assets such as preliminary expenses, accumulated losses and discount on issue of shares. If there is any goodwill of such company, the same is nothing but an accumulated loss. So, goodwill is also considered as accumulated loss. It is to be written down. We should be write off. At the same time, fixed assets may be depreciated in order to reduce the amount of loss. So, here the assets are also depreciated or the amount of the value of assets are reduced. Therefore, fixed assets are revalued for the purpose. Here, the assets are also revalued at the purpose of capital reduction. So, therefore, here writing up of paid up capital means reducing the part of the paid up capital for the purpose of writing of the fictitious assets such as preliminary expenses, goodwill and other the revaluation or reduced balance of assets. So, here capital reduction account. So, for the purpose of finding out the total capital reduction amount, so one separate account is prepared, that is capital reduction account. So, here capital reduction account is opened for transferring the part of capital which is lost, means the part of capital which is reduced. Such capital is to be transferred to capital reduction account on credit side. It represents the sacrifice made by the different parties like shareholders, debenture holders and creditors. Here in capital reduction account on credit side, the sacrifices, what the amount collected from the shareholders, debenture holders and the creditors is transferred. And same way the capital reduction account is used for writing off of the accumulated losses. So, here first of all we have to transfer the part of capital, that is the sacrifice made by the equity shareholders, preference shareholders and debentures, and then we have to make total on credit side and same amount is utilized for the purpose of writing off of the accumulated losses, intangible assets, overvaluation of the assets and the balance of account is transferred to capital reserve account. After payment of or after writing off of the accumulated losses, if there is any balance in the capital reduction account, such balance is transferred to capital reserve account. So, here this is the format of capital reserve account. We see that credit side, it is having 4 columns. One is particular and amount debit side and same particulars and amount credit side. So, first we take the credit side. Here by equity share capital, by preference share capital, by debenture holders, by creditors, by profit on sale of fixed assets and by appreciation of assets we have transferred. So, that means credit side shows that all the sacrifices made by the equity shareholders, debenture holders, creditors, and if there is any profit on the sale of asset and any appreciation in the value of asset, such amount to be shown on credit side. So, it means what we get from the credit side is total amount of capital reduction amount. Such amount is utilized for the purpose of writing of all the debit balances, that is P&L account, increase or decrease in the value of stock, provision for doubtful debts, intangible assets, depreciation, any dividends paid. After payment of all these, the fictitious assets and the losses, the balance is transferred to capital reserve account. So steps to be taken for reconstruction. Here the following are the steps to be taken for completing the scheme of reconstruction. Here, first step, calculate the total loss. Here, according to the problem, the information given in the problem, according to that information, first you have to calculate the total losses to be written off. Next, write off the total loss. Next, our work is to write off all the losses by debiting capital reduction account. Then compensating the parties for sacrifice. Now we have to take all the sacrifice made by the different parties. So next you have to calculate the required working capital, and after the calculation of required working capital we have to pay off all the or write off all the losses. So first of all we study point by point. So first, calculating total loss. Firstly, you have to calculate total loss by taking into account the accumulated losses, fictitious assets and portion of overvaluation of fixed assets, arrears of dividend payable and unrecorded and contingent liabilities, and the like leading to total losses. So the total of these fictitious assets and accumulated losses is total loss. Next, writing off the loss. With the help of capital reduction amount, which is collected or which is the sacrifice made by the equity shareholders, preference shareholders, creditors, debenture holders, such amount is transferred to capital reduction on credit side, and to the total of credit side itself is a capital reduction amount. Then by using the capital reduction amount, we have to write off all the accumulated losses and fictitious assets. Next, compensating the parties of sacrifices. The preference shareholders' rate of dividend should be increased. The shareholders, those who have sacrificed, for them the compensation is to be paid. Therefore, the rate of dividend should be increased, and for debenture holders, rate of interest should be increased. Then calculating the required working capital. So after increasing the dividend rate and rate of interest, so now we have to find out what is the actual working capital required for the issue of fresh equity shares and debentures. So journal entries for reduction of share capital. For reduction of share capital, journal entries to be share capital accounted to capital reduction. Here first we have to take which class of capital is reduced. If there is equity share capital, then we have to pass journal entry like this: equity share capital accounted to capital reduction account. Then if creditors and debenture holders are sacrificing part of their claim, then you have to pass journal entry. First you have to take the calculate the sacrifice made by the debenture holders, and we have to pass the journal entry like this: creditors account debtor, debenture holders account debtor to capital reduction account. Creditors account means it is the sacrifice made by the creditors. Debenture holders means the amount sacrifice made by the debenture holders. So total amount is transferred to capital reduction account. Then for transfer of general reserve or any other reserve, if there is any reserve, so such reserve, that is the credit balance of general reserve, is transferred to capital reduction account. Then if there is any profit prior incorporation, such profit is to be transferred to capital reduction account. Then if there is any share premium written off, such share premium should be transferred to capital reduction account. Then if there are any arrears, so such arrears to be paid from capital reduction account to preference dividend payable account. Then if there is any profit on sale of fixed assets, such profit is again transferred to capital reduction account. So after transferring the reduced amount or sacrifices made by the equity shareholders, preference shareholders, debenture holders, creditors, and if there is any credit balance of general reserve or P&L account or share premium, such amount is transferred to credit side of the capital reduction account and the total is calculated and it shows the total capital reduction amount collected from the special class of shares and the shareholders or debenture holders or creditors. Now after calculating the total capital reduction amount, from such capital reduction amount we have to write off all the accumulated losses and fictitious assets like capital reduction account related to P&L account, debit balance. Then if there is any goodwill, it is to be written off. Patents, it is to be written off. Preliminary expenses, it is also to be written off. If there is any discount on issue of shares or any provision for doubtful debts on discount on issue of debentures, if there is any revaluation or increase or decrease in the value of stock and depreciation on the fixed asset, and such all the fictitious assets and the accumulated losses to be paid first. So here all the dues first settled. After settlement or after writing of all the accumulated losses and the other fictitious assets, if any balance remains, such balance is transferred to capital reserve account. So like this, here we have to prepare the capital reduction account to calculate the total capital reduction amount that is sacrificed by the shareholders, different classes of shareholders or any credit balance of general reserve or P&L account and other any sale profit on sale of assets and etc. So like this, first we have to calculate the sacrificed amount, then we have to total it and such total is called as the capital reduction amount, and after calculation of capital reduction amount, then from same capital reduction amount we have to write off all the fictitious assets and the accumulated losses. So like this, the journal entries and the adjustments are made in the capital reduction account. Thank you.